Great, thanks for the great introduction, Tony. And I'm just going to check, is there any golfers in the room? Well, not too many, that's good. So I'm not going to lose too many to hit off this afternoon. It's nearly 3 o'clock on Friday afternoon. I'm sure you've had a fulfilling couple of days. We'll try and keep this a little bit light and entertaining as much as I can on this topic. You'll notice one difference in my photo here to what's in your packs, and it is Movember, and the ATO I actually have quite a large team that we work with on Movember and raise quite a lot of money each year, so that's the reason for the Mo, and it's going to be around for a little bit longer yet. Start most of these sessions we talk about, I think a really important thing to talk about is why we're doing single touch payroll. What's the rationale? So I was going to ask you guys a question, start off with, what do people think the rationale is? Why do government want to go ahead with single touch payroll? What's the point of it? Compliance? Pardon? Simplification? Yeah. Other thoughts? Who are the beneficiaries of it? Sorry, I missed that. Did someone say the tax office? Maybe beneficiaries of the data. Look, I think it's an important place to start. As Tony said, we've had some legislation in place for a while, for 20 or more, and that brings all those employers on board with single touch payroll from 1 July 2018. But if I come back to this question of why, I'll kick off on a few things here, because from my perspective it isn't all about compliance. There's a whole lot of other reasons for this and rationale. It's quite unique from a government, and particularly from a tax new measure perspective, in the way we've approached this. It is about reporting through a natural business process. Traditionally with government reform programs, we get asked to collect some more information to support a new measure, and we would put a form out, and the software providers or the tax practitioners, whoever, has to complete some more details and send more data to the tax office. We've approached this quite differently. Really, we've looked at this and said, what's some things that happen in a process, in a business? As an employer, you run your payroll every week or fortnight or month, or all of those things for larger employers. How can we use that data that's in payroll to generate value and reduce some of these other reporting obligations? So single touch payroll, firstly, we do see as a longer term game about streamlining and reducing red tape, and I hear all the chuckles in the room. Reducing red tape when you're reporting 26 or 52 times a year, not once. How's that reducing red tape? And I'll get into a little bit more in the design later, but we've worked really hard on this initiative over the last 12, 18 months to actually look at what happens in a business, what happens when you employ people and how you run your payroll process. And we've really tried to build that process, and I'll talk a bit about how corrections and things work for single touch payroll. We're really taking the data that is already there in your payroll system and really trying to take it as it is. We're not looking for you to reconcile it. We're not looking for you to spend a whole lot more money on getting it into a good shape. It's really about generating some value from real-time information. And so the design we have and the way you do it is very much built around, and I'll come to the process. When you send off your payslip, when you send off your file to the bank, you send a file to the ATO through if you have software, you send it through your software. I'll come back to smaller businesses who don't use payroll software and how we see that working. This is the really big one for me about what the value is. It's really about the individual employees and unlocking the value of that information from the payroll system. It's information that already exists, it's already generated. The salary and wage information, the pay-as-you-go withholding information, the superannuation liabilities, importantly, but it's all information that's actually has to be provided either on a pay slip or in an end-of-year payment summary now for an employee to be able to do their tax. The value of that information from an individual employee perspective is that we can actually help people not get into end-of-year tax debts. If you have a couple of employers, if you have a help debt because you've done higher education, we can start to see how you're tracking earlier in the year, because one thing that we constantly hear is people don't like to get a bill at the end of the year. We've done a fair bit of research about some of the other overseas systems and the ability to get people onto a zero balance at the end of the year. Funnily enough, we've had a lot of feedback. People still like to get a refund. They don't want to land on a zero, they want to get a refund. But one thing they don't want to get is a debt at the end of the year, and particularly an unexpected debt. And through single touch payroll, as we start to get all employers reporting through single touch payroll, we can actually help people and nudge people who are not tracking in a net tax position, are not tracking towards that refund or not tracking towards a zero, but actually tracking towards a debt. An extension of that is in the future as well, the ability from a social security perspective to make sure that people don't end up with a social security overpayment as well. People will all be familiar with some of the Centrelink letters and things earlier this year, and that was about using end of year payment summary data to go back and try to actually identify people who'd been overpaid benefits and then asking for them to pay those back. That didn't go down very well because in a lot of cases those people weren't able to make payments or weren't able to pay that money back, or the data itself, it was difficult. It was a lump of data that the government was attempting to work out whether the person was working at the time, but it really wasn't ideal for that purpose. Single touch payroll would actually give us that view because we would have salary and wage information reported each payday. And again, that's about helping individuals not get into debt for people who can least afford to pay that back. Protecting employee entitlements. Again, the announcement for the extension of single touch payroll to smaller employers was part of the super guarantee package that was announced, and it was announced the same time as the ATO released its estimate of the super guarantee gap, which is $2.8 billion each year. This initiative, and I'll go through the design in a little while about how it does this, will for the first time give visibility of both super liabilities beyond the employee, but super liabilities will be reported through single touch payroll to ATO, as well as the new reporting from the super funds, which will give us the contribution payments, the amount that's actually gone into the employee's account, which will give us both sides of that equation, which we don't currently have. It'll allow us to actually provide that view to employees, to nudge employees to think about their super before it's actually too late. Often at the moment we only hear about super short payments after someone complains to us, and it's often after it's too late to collect any money back because the business is already not in a position to make repayments. Related to that is the levelling of the playing field. So again, there is a compliance element from the making sure, again, early intervention to make sure people are meeting their obligations around withholding and meeting their obligations around super and not getting an unfair advantage about other businesses who are meeting those obligations. And again, the current system working on annual reporting of the payment summaries has again us going backwards to actually go back and identify discrepancies, catch people out and go back and collect that money a long way after. Single touch payroll allows us to get more predictive, get ahead of it, and actually identify discrepancies far closer to when they've occurred. And the last one is, really this is part of a broader change. We again get questions around driving people to digital, driving small businesses to digital who have perfectly good manual processes and systems in place. There's broader than STP that's doing that. I don't know if people have heard of things like e-invoicing that's coming. I would say is probably a far greater reason to think about automation and systems, because that's the thing that will start to drive how suppliers pay money, how you put your invoices out, etc. It will be very hard in 10 years' time to stay in the current manual processes for doing that. And things like e-invoicing builds on the same platform as single touch payroll and as SuperStream. And again, you'll have seen through SuperStream the reduction in things like checks for payment of super have gone right through the floor. There's very few now checks that are actually used as part of paying super. That's all gone electronic. Just to give you a quick overview of just single touch payroll itself, I've touched a little bit on this. As I said, it doesn't change the requirement to provide a payslip under Fair Work. So you still need to provide a payslip to your employees with all the things that you need to provide now. You send the money to your employee's bank account. So generally, again, people would set that up through internet banking or through a file that they send to the bank to pay their employees. And under single touch payroll, you send the information on salary and wages, some identifying information for each employee, the super guarantee liabilities and the pay-as-you-go withholding through to the ATO at the same time. The super contribution amounts, initially when we looked at how we would do single touch payroll, we talked about the employers reporting also their payments when they come to pay at the quarter, or in a lot of cases people pay monthly. We've recently changed that to the super funds, a design where the super funds will actually no longer report annually on contributions to the ATO. They will actually be reporting in near real time those contributions. So we'll be receiving data that shows the contribution amounts that each employer is making for each employee within I think about 10 days of each period that's reported. And lastly, one of the things that's been talked about in single touch payroll, which we've been trying to do for a few years, is actually enhancing the employee onboarding process. So through the TFN declarations and the super choice forms, choice of fund forms, which again are currently a quite manual process, looking to use the data we have to pre-fill that in terms of the information about the employee we already have. And secondly, the choice form giving the opportunity for an employee to see their current super accounts and balances at the time they're actually offered the choice. At the moment, again, that process is usually a form that's provided to the employee with default fund arrangements on it, but the employer doesn't know the existing accounts, so doesn't present that, and it becomes the onus on the employee, if they want to do choice, to go and find those details, get them right, get them onto the form. And I think in most cases that doesn't happen, and then we end up with people who have 8, 9, 10, 12 accounts. And I think Tony touched on earlier, one of my previous roles was actually putting in place the consolidation of super functionality that we have and the display as part of that. And so we're continually chasing and encouraging people to look at why do they have 10 accounts? Is that actually a good outcome with the fees, etc., that they would pay? And really putting those balances in front of them, which is really just chasing our tail all the time, because in the current choice process, a lot of people don't exercise choice because they find it too hard to actually go and find the details, or they're just not, couldn't be bothered to do that. Importantly, that last service is an optional service, so that's something again that will be supported by the software, by a software product in the employer, and that unlike the pay event, which is a mandatory service and has dates on it, that one is actually an optional service that employers can offer once they have software that enables it. This slide just shows some forms that you probably will recognise, and there's some of our existing forms that are in the process, and it's really just trying to highlight, as part of single touch payroll, we're not asking for new information. It's information, as I said earlier, that's already provided either on the end of year payment summary, but we're asking for it to be provided on a year-to-date basis each payday, and similar to what would be on the bottom of a pay slip currently, and the TFN declaration information as well. Through single touch payroll, the data that's collected as part of that each payday is sufficient as well for those new employees that you've had come in to not have to provide the TFN declaration. So we've looked here at how do we actually offset some of this the reporting under single touch payroll. And so we've said if you report under single touch payroll, you don't have to send us your TFN decks, and importantly, you don't have to issue payment summaries anymore. So the payment summary data comes through the SDP data, and as soon as you finalise that final indicator that's on the FIN at the end of the row there, that will send us each, at the end of the year for each employee, you'll send us a final indicator. That will allow us to release that data into pre-fill, whether that's through a tax practitioner service or through a My Tax return. And if an employee wants a payment summary, they come to the ATO and either get that online or call us as part of that process. So we're removing the obligation for provision of payment summaries, and removing the obligation, importantly, to not have to chase ex-employees with payment summaries and find where they are, print them out, mail them, etc., which I understand is a bit of a bugbear as well. The bottom row on here just shows what we're aiming to do as well with some of the data in terms of streamlining. So we're looking to pre-fill the activity statement with the withholding information as well, again to over time make that experience easier on the activity statements. One of the things as well we're looking at the moment for small businesses is a lot of small businesses or small employers lodge their BAS monthly just for the withholding event. So they have a quarterly BAS for their GST and instalments, but monthly they have to actually send a BAS in just for the withholding. What we're moving to over time will be the STP data, if you're satisfied with the STP data, you can just pay it and you won't need to lodge that monthly BAS either. And there's a small millions of BASs each year that we receive are purely monthly pay-as-you-go withholding BASs, and that's because of that threshold of 25,000 withholding that you need to actually lodge a BAS, have to lodge and pay monthly. An important point about STP that I need to emphasise is that it doesn't change the due dates. It is purely a reporting initiative. It was consulted on earlier as reporting and payment, but based on feedback, the government chose to make it a reporting obligation only. So the due dates are as they are now, as per the current BAS. However, we're trying to make it easier for those businesses who would like to report and pay in real time to do that as well. So again, we're looking at that BAS process to see how we could actually streamline that, make that payment process and opening and closing balances and things to again make that BAS process much easier for people. Just quickly to go through a few points on the law. So who has to report? We have substantial employers is the definition at the moment for 20 or more in the law. With 20 or more employees are required to report from 1 July 2018. As Tony mentioned, the government announced it will extend single touch payroll to employers with 19 or less from 1 July 2019, a year later. That is still subject to legislation going through. And there also, for both of those, there is also the idea of a first year transition, which will be no penalties for the first year. So really that 1 July 2019 for small business, there'll be flexibility there through to 1 July 20. How do we define the number of employees? The number of employees is defined, whether or not you're in the 20 or more for next year, is defined by a head count on the 1st of April. So you basically count how many employees you have at 1st of April to determine whether or not you have to come in from 1 July next year and report STP. One of the questions we often get is about seasonal and whether or not you count casuals in those numbers. We've struck a process that says count those employees that worked in the month of March for your 1 April head count. So if you have only bring in a seasonal or peak workforce over Christmas and then drop right back, you won't have to come in as part of the July 18 initial single touch payroll. So I've kind of touched a bit on this about what and how often I report. The obligation is to report on your payday. As I said, whether that's weekly, fortnightly or monthly. But again, there's flexibility around that, which I'll go into in a minute. And the reporting, as I said, is salary and wage amounts, pay-as-you-go withholding, superannuation liability, and allowances as part of those salary and wages that get reported each payday. And again, I've touched a little bit on this about what don't I have to do if I report through single touch payroll, which really picks up clearly on the payment summaries, the TFN declarations, as well, and the payment summary annual report that you currently send to the ATO once a year. Just a bit of a timeline about where we're currently up to. The ATO released its initial services for that payday reporting on 1 July this year, and the software developers have been building and developing this into their products to enable their employers or their substantial employers to report on this from next year. We've had 2 software developers who've been reporting to us since 1 July with just a couple of employers, and that's been a really useful part of a limited release that we've been able to actually test and bed some things down and actually improve our procedures, test our design, and also start to think about some of our compliance and how we actually manage that client experience as people come in there. From 1 October, we released an additional service, which I'll talk when I talk about fixes. There's an update service to that pay event that was released as well. On the 17th of October, we wrote to all employers with 15 or more employees to their payroll areas, and again, it was highlighting the 1 July next year and really just starting to create some awareness over what was coming and the obligations. But the key message in there for those employers with 15 or more employees was to talk to their payroll provider about when they're going to be ready and how they're going to enable them to report under single touch payroll. The chart we'll write out again in February next year as well about the 1 July date, and in March or just after that next year, we're currently tentatively looking at whether we can have a service available for that employee commencement or that employee onboarding process as well. And then on that chart there, we've also got the small business start date, which again is asterisked because of course that's subject to the legislation being passed through Parliament. Penalties, exemptions and deferrals. So as I mentioned, the first 12 months of reporting through single touch payroll, there is an exemption for not lodging or not reporting on time for single touch payroll. That's part of really trying to get people in and smoothly reporting without fear of being penalised for getting it wrong. And that kind of uniquely is not just part of a Commissioner's discretion, but was put into the initial single touch payroll law, that 12-month transition. Exemptions can be granted under either an entity basis or an individual basis. Some of the examples there, again, we get lots of questions about what if I don't have internet? If I'm in a rural area, I get lots of people say I'm in a city area but my internet's still bad. So there are exemptions there for no reliable internet connection, and also those more seasonal activities where people have a lot of employees for shorter periods. There will be exemptions in terms of 1 July 18 processes, and we're still working through. We've been consulting quite heavily on the various categories of exemptions, and we'll put some more guidance out around that as we go forward. And certainly the small business extension will require further consultation because I think it brings in place more scenarios for that as well. Deferrals, we've just published a deferral process for 1 July 18. That process, the feedback, we've been working now for about 18 months quite closely with software developers on their product development and how they're going to build this functionality. Some of the very large software developers have quite long lead times, and some are saying that they will struggle to make 1 July 18. Some of the smaller developers are saying they won't be able to get all of their clients in place who need to by 1 July 18 because some of them are on older versions of products and need to migrate to newer versions, for example. The deferral process allows an employer with a payroll product who's not going to be ready to actually request extra time, and we really just need some plans and evidence, and we're again being quite flexible about July 18 as we will about July 19. It's not about hitting everybody at one date, it's around actually trying to get everybody there but in good shape and in good process rather than rushing everybody at a date. But we do have a target date which is in the law for at least July 18. However, I guess my message there is flexibility, and as long as people are talking to us, we're very flexible around additional time. Reporting a fix. There's been lots of design conversations with payroll areas about how, and myself and my team have been educated, I guess I would say, about payroll and certainly some of the things and idiosyncrasies in payroll, and in particular how many changes happen through a payroll cycle. Again, we've talked a lot about language, and we talked, I think, it's corrections, and some people in payroll said, well, you can't use corrections because a lot of the times it's not that they got it wrong, it was actually the best available information that they had that they ran the pays on, and then some other information was provided to the payroll area afterwards, which means they've had to go back and fix that data. So we've done a lot of work on this to say, how do we make this not onerous? If you're reporting 26 or 52 times a year and you identify a change to a pay from 4 pays ago, you don't want to go back 4 pays and send another file for that 4 pays ago file. Our design actually says you can report that information in your next regular pay cycle report, or an update or you can actually do an update within 14 days of it being identified. So what that means for the employee level data, it's all reported year to date. So if you report your figures to us for your employees, you identify that something needs to change. Generally in a payroll, you'll either pay that in your next pay cycle or you'll do an out of cycle pay. And like bigger employers do lots of out of cycle pays. You don't need to report to us each time you do an out of cycle pay. That can occur in your next main pay run as well and be reported at that stage. Importantly, you very rarely have to go back. You can actually generally report those updates just in the next pay cycle. So again, that's something we've really thought about in terms of how we use the data, that it won't be straight. There will always be churn happening through that, because that's what happens in a payroll system, and that's what you do when you actually try to work around a natural process rather than forcing complexity back into the business and forcing costs back into the business. And that's been an important aim here. Correcting errors on the employer information. Again, I mentioned we pre-fill the labels W1 and W2 on the BAS with the withholding and the salary and wage information. But if you go to your accountant or bookkeeper or tax agent at your month or quarterly BAS and you discover there's a discrepancy in what you've already reported, so that with those pre-fill amounts are wrong, you can update them and then report back in through the next STP report, true up the STP figures in that next year-to-date amounts. But the fact it is pre-fill data. As I said, we recognise we don't want to drive people to bookkeepers and accountants every payday. We want people to actually only do what they do now and then true up the data again. And again, that's something we just need to accept as government, that the data is what it is. It's a view into the employer's payroll at a point in time, and as soon as we've got it, it will have moved on. And next time we see it, there will be some updates made to it. Just to the small business pilot, when the Minister announced that single touch payroll would be going ahead for all those with 20 or more employees, she also announced a pilot for smaller business. There was a lot of feedback and concern about the impact on smaller employers, and particularly given a lot of those don't run payroll software. So she said that the ATO would run a pilot. That pilot started in December last year and went through the first half of this year. A couple of slides. We had 156 participants in that pilot, 128 of which were small businesses, and 22 tax practitioners, and we had 6 software developers who were part of it as well. There were 3 phases to it. The first one was those with very manual processes who we brought in and worked through some of the processes for single touch payroll, tried to understand some of the barriers, costs, some of the issues that we would have and challenges in bringing smaller business in. The second part was working with software developers on some prototypes of STP reporting, and again testing that with some small business clients as well. And the third bit was some focus groups with tax practitioners, where again we stepped through this process of what was required and how would it work for smaller businesses, and what were some of the challenges. From that work, we wrote a report which is available online on our website around what we felt about small business being brought into single touch payroll. The findings of that were that we felt from that research and from that pilot work that we felt most small businesses could implement single touch payroll with modest amounts of effort and cost, that the change would bring improvements to the system integrity and transparency. The benefits would lie though in improvements in the commencement or the onboarding and the reporting effort, but leveraging the payroll process wherever possible. And that earlier and more helpful intervention would help small businesses potentially to identify cash flow or help advisors help their small businesses. And we also called out that we felt 10% would really struggle with this. And again, they were the 10% who struggled with SuperStream. They were the 10% who had very little automation in their businesses about that. And some strategies were identified in the pilot to perhaps work through that with people. The other important finding, which not on that slide, is that we didn't think everybody would actually achieve single touch payroll through payroll software. So there was a really important piece there that said, similar to SuperStream, there needed to be alternatives. We can't force everybody into one process. And regardless of whether the payroll software was free or low cost, a lot of small businesses just wouldn't cope with running payroll software, nor would they want to do that. So we are working with, and we did as part of the pilot, work with one of the banks around testing the idea of extensions, for example, to internet banking to capture that single touch payroll data that we talked about. Importantly, that's part of a natural process still. It's part of paying your staff. Unlike if we get often also asked, will we put a government reporting portal up for this, or will we extend the super small business clearinghouse? And my answer's been no, because that is just reporting. And it's just extra reporting 26 or 52 times a year when I go into the super clearinghouse 4 times a year to pay super. So going in there every week or fortnight is just an extra process. It's not a natural process for me. So we're working with industry and we expect over the next 6 months to start to see some options through internet banking, some options through some other technology to support reporting, which does leverage that process and help small businesses to be able to actually report under single touch payroll, but also drive hopefully some improvements in their payroll processes as well. So they were the recommendations, again in that pilot report, that we do create a mandate for the smaller employers to come in, but from 1 July 19, with that transition period for another 12 months, that we really focus on that targeted support. We've talked a bit about what we did back in the GST days of really getting out and helping businesses to make this change, but also the importance of accountants, bookkeepers and trusted advisors in making a change like this over time as well. So we do see that the ATO and government can't do this on its own. Ensuring that there are a range of low or no cost solutions for the micro market in particular. If you look at the less than 5 employees, 2/3 of those don't run payroll software. Lots run a product which you're all well familiar with called Excel for their payroll. So that's something again that we have to really think about. How do we get people from Excel to be able to report each payday to the office, to the ATO? And other bits of this were around building confidence so that people have a really positive experience and not be fearful that by reporting they're exposing themselves to penalties, exposing themselves to audit, exposing themselves to more attention. That's certainly not our message for this. I talked earlier, the benefits really go to your employees and the benefits over the longer term will go to those employers. And I didn't talk much earlier, I talked about the possibilities around social security. I think I touched on statistical information and removing some of the surveys. But another important thinking around this in the future is payroll tax as well, and the ability potentially to leverage single touch payroll to actually streamline. And there's a tax agent I know who I've met in Albury who rings up from time to time. He's very keen on not so much this first bit, but this future phase where payroll taxes could be included, because he works across Victoria and New South Wales and has to do payroll tax in kind of 2 jurisdictions for his clients, which I gather is pretty painful. And the last one there, the last 2 points was to consider incentives for early adoption, and lastly to make it easier for employers to find certified payroll solutions or reporting solutions for single touch payroll. So the compliance approach. Again, this has to be really different. It has to be quite different to anything we've done or thought about before. I've talked about the data. The data is not traditional data that we get on forms. It's not exactly going to have all of the elements. One of the examples is employers, if they don't pay staff, don't have to report that to us. They don't have to report nils. So it's only reporting if you pay your staff. So therefore, we're not going to get these nil lodgement advices that say if we didn't receive a report, we know that's because you didn't pay staff. We will have to be clever in our analytics and work around identifying those kind of patterns and those kind of businesses that are irregular and when they pay, rather than again forcing more reporting back into the employers or the small businesses. It's a huge amount of data that we'll start to receive. We move from annual reporting to weekly or fortnightly on each employee. There's 800,000 employers in Australia. There's 72,000 employers in that initial, those with 20 or more employees. By the time we implement this for all employers, we'll receive over 500 million payroll records each year, which is a huge amount of data. In addition to the 500 million records on payroll, we'll also be receiving that superannuation contribution information, which again, I think is about 200 million records a year as well. The data you report from your payroll, as I said, will provide a view only at a point in time and will potentially change next payroll event as adjustments and fixes are made to it and new information comes to light. These are all things that have to inform how we think about compliance. We do expect you'll correct things, either in the next payroll period or when you do a reconciliation for your activity statement. And again, that's okay, that's how the system allows you to. And we will try and prompt where we see significant anomalies that are not easily explained, and this is where we've got to get the balance right. I mentioned the no penalties for the first 12 months. I'll jump to this slide because this is really how we've started to think about our compliance approach in this kind of volume of data coming in, this regularity of reporting, and it's the very familiar, people will be familiar with the customs, green lane and red lane. We've been looking at how this was implemented in other jurisdictions in the UK, importantly, who did this a few years ago and are still working through their implementation. New Zealand has announced and are working through a similar implementation in a bunch of other countries. One of the things that we're very mindful of is not over-engineering. Typically, again, we'd probably start with designing our red lane or our compliance. Which ones are we going to pull out and have a look at? With this volume, the danger of that is that we drive a whole lot of work and reconciliation and cost back into business as we question and challenge all those anomalies that I said are part of this system. So we're focused instead now on our green lane to start with, which is how do we make a good experience here for 98% of people who come into single touch payroll and start reporting. How do we make sure that's smooth? How do we make sure that we only send out questions or nudge reminders when we think there's actually something that's not going to self-correct? A lot of the things that we would think don't add up will correct as you report in the next payday. They will self-correct because there is going to be that natural flow of data changing over time. So we're really focused on making sure that with that level of reporting every week or fortnight, we need to very quickly triage all of the data we get, but only really intervene in those where we really think there is something significantly wrong, which would take it to our red lane. And importantly, from a business cost perspective, firstly, and secondly, from how we deal with all the calls that would come in, we really need to be careful about how we set that up. And we've already started that on those early adopters that have been reporting to us, those couple of businesses I mentioned earlier, to really start to test at low volume what would we identify as an anomaly, what message would we send, what would the business, how would it respond, would they call us, would it help, would they get sick of us in 5 minutes after we send about 3 more messages and stop listening to them? So all of those sort of things as well. So we're trying to learn while this is at low volume, so by the time we get to high volume and smaller businesses coming in, we'll have a very polished and seamless kind of process. And again, only really pulling out genuine anomalies and only querying things that we think are genuinely need to be. The focus for the first 12 months to 2 years is very much on help and assist, trying to get people to bed down this new reporting and get it right, but recognising if there's an error, we'll help people to correct it and move on. That's the kind of focus for this data. As I said, the data is not about catching people out, it's about getting that data out and the value that generates for employees over time. The streamlining that we can do with that data over time as it's used for more and more things. So what can you do to prepare? Probably depends where you're up to. If you've, in terms of more substantial, this is probably more focused at the moment on those that come in July next year. For smaller businesses, probably there isn't a lot to do at this stage. See where we land with some legislation, and as we go on, we'll actually write out to all businesses as well with some tips and things around that. The message we've got really for those with 20 or more employees has been to work with their software developer. We call them digital service providers, to just understand when their product's going to be updated for single touch payroll. And we've heard varying dates there from January, February next year through to August next year at the moment is the kind of range of dates that I've been hearing that products will be available. You can review your current payroll processes, understand, I guess, things like what are some of the anomalies, what are some of the exceptions and things there that you think you want to look at as part of that process. For larger employers, this is a real chance, I think, for the payroll people to get together with the tax people. The payroll people and the tax people don't generally have as much to do with each other until the end of the year in the current process. So this will really drive some different thinking, I think, into some of these employers as well, as more and more the payroll area is who's sending off this information, which is then being used for pre-fill, etc., into the tax process. And to start to develop a bit of a transition or implementation strategy. One of the things we've talked as well a bit about is how do you think employees are going to react the first year when you say, I'm not giving you a payment summary? And what are they going to say? Where's my group certificate? You've always given my group certificate. So we're going to be very focused. There's some real culture change here that's got to happen, but not just for employers, but also for employees over time. we get that. Again, that will take some time. We'll actually be doing a lot of messaging next year for those employees of the larger employers, just to ready them for this, but we'll probably have to do that every year for the next 3 or 4 years before people remember that you don't get your payment summary from your employer anymore. Some of those larger payroll products are still going to provide payment summaries for the first couple of years, just because it's easier than answering all the questions, where's my payment summary? The fact is, most people don't need a payment summary anymore. The data gets done as pre-fill through the tax agent return or through your own return if you do it yourself. So, the payment summary is often only needed, but it's funny how many people still go and print it off and actually still look for that as their end of year, this is what I earned. But there is some culture change, and again, as we start to put more of this information online, so the individual information will go online through the ATO online service in MyGov. As that more information starts to go online, again, there will be some education, particularly about super. Who here thinks employees understand super guarantee? Anyone? Not many. We've already tested, just in a small way, some of the thinking around how do you display someone's super guarantee liability that appears on their pay slip with the information that's been paid to the super fund at the quarter. And it's amazing how many people think what's on their pay slip is being paid every payday to start with. So we get there's some education, there's a lot of education, but this will be a game changer, we believe, over time for engagement in super guarantee by employees, because we can make that visible. It's not information they don't have access to. They have it now on their pay slip and if they look up their fund portal, but no one does it. So there will be the ability here to really drive engagement in super as we get more of this information. The trick will be, how do we display it in a way that doesn't get them to call their employer all the time, and doesn't get them to call us all the time, and doesn't get them calling the super fund all the time because they're confused by it. So we do need to work through that, and there's a fair bit to do there. We've done a lot of co-design of this. We have an advisory group that meets monthly with bookkeepers, practitioners represented on there, software developers, employers represented on there. We have design working groups, various design working groups. We have a readiness group, all of which have participants from the tax practitioner industry on them, and are having input to this design as we go, and have been doing so for the last 12 to 18 months. I really valued the input that we've had and the learning we've had through that process, and we'll continue to do that consultation on how we display the data, how we get this right as we go forward, and importantly, how we bring small business into this initiative carefully over time without driving the cost to business. And last one, importantly, keep informed. You can keep it, this is a message for employers, of course, but keep informed by talking with your advisor. So I might stop there and just see if there's any questions.
Okay. Will single touch payroll reporting include reporting of eligible termination payments, fringe benefits and salary sacrifice? And also, how is it envisaged that files will be transmitted to the ATO?
So the first one around ETPs are out, I think. FBT and salary sacrifice can be added in at the end of the year through that update service. So they don't have to be reported each payday, of course. So they're things that can be added in at the end of the year, therefore removing the need to provide separate payment summaries for them as part of that. And the transmission of the data goes through standard business reporting, which is at the moment for the substantial employers will be the software products having a connection through to the ATO in the same way that some will be familiar with PLS communicates on the SBR channel as well. So all the software developers are either building a connection from their software to transmit the data, or in some cases that'll be through third parties who are part of that, in the same way third parties are part of some of the super transactions. So again, it's the same platform that SuperStream uses to transmit the data, but it'll be between the employer and government.
At the lower end of the scale, where you've got mums and dads operating through companies and trusts,
yeah.
Due to cash flow issues, a lot of them don't actually pay themselves wages into a bank account.
Yep.
How's that going to be dealt with?
They will pay, they will report still at the same time. So it's really about reporting when they pay. So if they pay themselves through their payroll, if they don't pay themselves through a payroll system, we're looking at, again, for smaller businesses, whether we would actually get them to report at the end of the year, that process. So this is really about, they're the sorts of things we're looking at around. They're not paying through a regular payroll. They're often paid through accounts receivable or whatever in the business and then trued up at the end of the year. So that stuff can be reported when it's paid effectively. So this is about leveraging the payroll process, not creating new obligations.
You said that the employees are going to complete their own TFN numbers through their MyGov, is that correct?
The onboarding service that we're looking at providing will pre-fill the TFN declaration and the online choice form. We're looking initially at a MyGov form, but we're working really hard with the software industry to enable. A lot of the software products have onboarding solutions that they provide, and there's some others that are not payroll products but also still provide onboarding where they do all your commencement forms. We're looking at how we can pre-fill those. That's where the preference is, but the default or fallback will be for the employer to send their employee to a MyGov screen, and we'll be able to pre-fill it there, but importantly that data gets sent back to the employer into their software. So if the employer doesn't have software, they can't receive or use that process.
So the employer will see what the employee has completed before it goes to the ATO, because hardly any employees know how to fill out a TFN declaration correctly.
No, that's right, but we'll pre-fill it. Firstly, we'll pre-fill it with the data, so we'll get most of the data in there.
Okay.
Then it will be sent to the employer, and then the way that data comes back to us will be in the pay event reporting.
You mentioned that you won't have to provide possibly a end-of-year payroll payment summary. What about other third parties who require it, like banks, financial institutions, things like that? So what would be the turnaround if an employee rang the ATO to ask for their payment summary? What is the actual turnaround time for them actually receiving that?
To produce the payment summary. So the first place they'll get it is online. So we'll try and get people to get it through ATO online in MyGov, but recognising there's some exceptions where people for whatever reason can't get online. In that case, I know we haven't struck a service standard, but we'd be looking to get it out to them pretty quickly. We'll just produce it and send it out as an exception, but it'll be an exception process. We will generally try and help people how they can get their payment summary themselves as another thing in MyGov. It'll just be another tab that enables the payment summaries to be picked up. And importantly, they'll see that information progressively grow in there during the year, and then there'll be an indicator that says when it's final for the year, so that's when they know that's pretty much what was their payment summary before.
All our pay slips at present are produced in a set order, for example, hourly pay, holiday pay, etc. Will you require them in a set order, or will you just take them as they're produced now through the payroll system?
I don't think we're requiring a set order. I think we're just getting it as it is. There's no need to change the order.
And you'll interpret it.
Pardon?
Oh, great. Yeah,
Yeah.
terrific.
Yeah.
Often termination pays are out of payroll cycle. How will that information get caught up in the next payroll?
On the ETP, how does if ETPs
Not
are
an
out,
ETP, just an ordinary termination. You've got someone that's perhaps done something wrong, instant dismissal.
Yep. That will just be reported to us in the next pay event potentially. So that's not about out of cycle payments.
Yes.
So you can report it. There's flexibility, so you can report it at the time if that's what your process is and your software does. If not, it can be reported at the next pay event. It'll just get caught up in the next lot of pay.
Fine.
As long as we get the final amount of data, and that's what enables you to say, done, I don't need to worry about chasing that person with a payment summary. I've given it all to the ATO, and the ATO can worry about it.
Great, thanks.
Yes, with this wonderful data, we're all being forced into MyGov, which is great. However, I can tell you, baby boomers hate MyGov, right? And all those who aren't quite brain scientists, right, won't go near MyGov. Right? And a lot of them don't have access to it.
Yeah.
So you've got the sort of the bottom of the economic socio-scale who don't have access to it or don't want access to it.
Yeah.
But we're now going to be forced where they're going to have to.
Someone asked me that, why don't we just force everyone to get a MyGov account? Obviously we can't do that, and we wouldn't want to do that.
Well, it's going to happen by de facto, it is.
Look, I think 2 points I'll make on that. One is MyGov's really evolved over time. A lot of people think about MyGov as maybe their first experience with it, with the number that you had to write down somewhere and remember. There have been some improvements made to it firstly, but secondly, I'm not thinking that's a end state either. I have a dream, we all have dreams, that I could actually have that data in wherever I want to have it and access it. So for me, that'd be in my internet banking, because I can actually key in all my asset information. Why wouldn't I want my tax and super information there as well? So I guess my dream, or not too far away, as we produce more and more APIs, which means we support people to use stuff in the software of choice, not just government things, that would enable a process where I don't need to go to MyGov. I could have it in I could give permission to release that data into my internet banking as an example. So I take your point. That's probably where some of that's heading though, and evolution's heading and innovation's heading, is that people will have apps of choice where they get all the information about themselves that they can keep there, and that's where they can access it. We haven't got a solution today, but that's probably not that far away from there.
We might have to stop the question time, and we understand that there are lots of questions. The Minister's hit the start button. And as John said, there's quite a bit of wiggle room before the legislation services. So we're very understanding of the impacts that it will have. And the pilot report has identified up to 10% of employers, the transition will be problematic. What we want you to do as advisors to those micro businesses is to feed those concerns through to us, direct to myself, my email address. The Minister has called a meeting next week to test the temperature. Now that the start date has been fired, the Minister wants to understand these instances of how, or the cases where it will be problematic. No one's talked about connectivity with the internet, being able to actually transmit the data. There's a plethora of issues out there. And as John said, there will be some methods that those micros will be able to gravitate to. He's mentioned one or two, the banks being potentially a provider of that service. So it is early days, but we do want you to bring those examples to us so we can put them forward. And when the legislation services, we'll see how much wiggle room there is. We'll see how fixed those dates are with respect to implementation dates. So I'm happy to take questions as well. My email address, if you've got the magazine each month, my email address is in there. It's tony.greco@publicaccountants.org.au. So please feed that through to me. I'll also be representing you at the Ministers' meeting next week, but it is early days. So if we can just put our hands together for John.
Thank you. Thank you very much. Appreciate that.